And I think it's really, really important for investors that are listening to this, if you're a current investor or thinking about investing into short-term rentals or any sort of real estate investment, you're really navigating two different markets all the time. One, you're navigating the acquisition market, right? The actual real estate market. In our case, the single family homes market, right? And we're looking at supply, demand. We're looking at the cost to acquire a property, debt service, all of those different things. Like, what is it going to cost me to enter this game and invest in this game? And whether it's commercial, whether it's multifamily, whether it's single family, whether it's just long-term rent, short-term rents, whatever it is, you're always looking at the overall real estate market, right? And so those are some of the articles that are very front and center for us. The housing bubble is going to crash. I had you do this. We went back a decade, and you could have, you showed me, 5 or 6 articles from the exact same people, the USA Today's, the CNN's, the Fox. It doesn't matter who it is. It doesn't matter what side of the aisle you're on. They're trying to predict the housing bubble crash, and every single year for the last decade, they're talking about the bubble's going to burst, right? And so
every year,
so we see that all the time, right? We know that, and at some point they might be right. They probably will be right, right? I don't, we just don't show that a bubble is going to burst outside of just looking at high prices. Prices are really high right now, and they've been high, but they stabilized, right? They've been pretty flatlined for about 3 years now. Since really 2023, they started to really stabilize and kind of flatline. And this has been kind of our depression right now, as far as the prices have been depressed, because overall demand has gone down because rates skyrocketed, cost of owning these homes has gone up, all those different things. So you have to understand, when it's not always, when we look at articles and we look at data, there is a case to be made for all of this stuff, good or bad. You can find stats to support almost any argument. You always have been able to. And that's no different. So you have to take all of these different things, all these conversations with a grain of salt and say, hey, listen, is this something that I can navigate, and how am I going to navigate this? Because most of the time, when everybody says is the best time to buy, you're usually late to the party. When everybody says it's not a good time to buy, that's your sign to buy, because by the time they say, oh man, I wish I would have bought then, is the time that they were saying don't buy. Don't buy, don't buy, don't buy. They look back, fast forward 3 to 5 years, and they're like, man, I wish I would have bought then. So that happens all the time. So let me go back to my original point, and we'll pull some numbers up that you want to talk about. We're looking at 2 things. Okay. The acquisition side, real estate side of the marketplace, right? How much is it going to cost me to buy this? How much is my debt service going to be? What are interest rates? All that kind of stuff. Right. The flip side of that coin is, if I'm buying an investment, I need somebody to pay me for that investment. In our side, they're going to rent as guests. Commercial might be a hotel, might be an industrial place, it might be a healthcare spot, whatever it is, whatever sector of the commercial space. I have a consumer on the back end that is going to rent this property from me. Long-term rentals, I need to find a household that wants to rent my property from me. And so on the back end, there's a marketplace as well, and there's economics involved in that. And so I have to look and say, what does the overall consumer demand look like? Is it going up? Is it going down? Is the inventory, my competitors, are they going up? Are they going down? Like, what does it really look like on the back end? And so I really have to analyze 2 different markets. What people focus on a lot of times is the front end market, and usually when the news is the worst on the front end, that's your best buying opportunities, because there's not a lot of good buying opportunities when the news is really good, right? And so it is a good indicator that we have a good time to buy when all of these different things are stacking up to the average consumer is not going to be interested in this property, right? And so for us, particularly with single family homes that we're using as investments, when the single family home buyer starts to sit on the sidelines, they don't want to buy, the cost of living is going up, maybe their interest rates are going up, they don't have as much disposable income, they can't qualify as much, maybe lending tightens up, all of those things that are affecting them negatively keeps them out of the market. And so what happens is, and we're seeing right now, that delta of buyers and sellers is as wide as it's been in a long time. I think 2014 was the last time it was this wide, and it was a massively different look back in 2014. But the gap between buyers and sellers is pretty wide right now. There's actually more sellers than there are buyers. And so when that happens, that is a big sign for me as an investor that now's a really good time to buy. However, I have to make money on this property. Yeah. So now I have to say, is the same thing happening on the back end for us with short-term rental consumers, where they're using these properties? And this is where this doesn't happen very often, is we're lining up where it's a pretty depressed market on the front end where we can buy, but a very robust market on the back end where our consumers are paying for these properties. Demand continues to go up. The consumer continues to spend more and more money every single year. Yeah. And it looks really, really good on the back end if you know how to play this game. That doesn't happen that often. And this is where I tell people right now, we're going to look back and we're going to say this year is probably the best buying opportunity we may see in our lifetimes in the short-term rental space. Now, let's say we're talking about long-term rentals. I've got a multifamily property. We're seeing that rents are starting to go down a little bit. And so they've always gone up. They'll go back up. But right now they're dropping a bit. And they're dropping. Real estate is always very regional, but many areas are starting to drop rents. And all of a sudden it's like, okay, I might have a good buying opportunity, but my back-end revenue is actually not as good as it used to be, right? And so hotel, motel space, RevPAR, all the hospitality space out when you remove short-term rentals, that market has been going down a little bit, right? And so there's a lot of signs on the back end for some other places, some other single-family long-term rentals. Rents are going down. Right. Prices and cost to hold these properties are going up. And so might be a good time to buy, but I got to make sure that I have a delta there to make some money on the property. So with short-term rentals, we're seeing a really golden buying opportunity, in my opinion, depressed on the front end, pretty robust on the back end, simply stated, right? And so I'll pause for a minute because I know you have a bunch of stuff written down. Does that make sense of what
that does make sense?
So as we're talking about this and as you're listening to this and as you're considering whether you're in the game or not in the game yet, is now a good time to operate in this game. In my opinion, it's one of the best we've ever seen.
Okay, I brought this up. Do you even want to read stuff like this about the buyers and sellers?
Yeah, so I said since 2014. So 2013 records 630 more home sellers than buyers. In contrast to 2014 when the market was recovering with a more balanced, low-priced inventory. Sellers outnumbered buyers by roughly, 2025, 2026 features high mortgage rates leading to record low buyer demand, unsold inventory piling up, and sellers outnumbering buyers by roughly 44% of the market. Now, one of the big differences too, and I don't even know if we can look this up. Right now, there is the demand. There's way more buyers than there are, way more sellers than there are buyers. That means it's a buying market, right? You can get good deals. You can negotiate. There's more inventory to choose from. Those are all good things if I'm a buyer. Not a great thing if I'm a seller. And so what if, we've got a massive difference between buyers and sellers right now. Biggest we've seen since 2013. That indicates if all of those people are saying the bubble's going to burst, that would be a really good time for the bubble to burst because that would say prices have to come down. Why aren't they coming down? They're stabilizing. There's still enough buyers to support because even though that delta is pretty wide, the number of overall sellers and the number of overall buyers is way less than it was back then.